Real estate investment trusts can pay you big dividends, and that is what we're talking about today in this video. Now, this investment option is typically referred to as REITs, REITs. Well, thank you, brother. REIT. That's what we call it. Real estate investment trust, REIT, whatever. Let's get rolling with this. It was originally created by Congress in 1960. And the beautiful thing about this is to give everyone the ability to get involved in the real estate market and trade just like they traded in the stock market. So instead of going out and buying physical properties and dealing with landlords and tenants and people and all the mess and all the asset liability that goes behind real estate investment, well, now you can put your money into a REIT and generate real estate dividend income. And in fact, REITs give you the opportunity to earn the best paying dividends. Some even pay you monthly, and I'm going to tell you some of the ones that I have chosen that pay me monthly, and there's one that actually pays me quarterly that you got to check out, so stick with me through the entire video so you can give yourself a raise and start making some dividend income. So there's two basic forms of REITs. You got the equity REITs and you got the mortgage REITs. We'll break them right down very quickly, very easy to understand. All I ask is a little bit of a dividend from you. I want you to pay me a dividend. Can you guess what it is? Drop a like. You know, that's the only dividend I want. Okay, let's talk about equity REITs to start off. All right, equity REITs, they own a wide variety of property types. They include things like office buildings, they include things like shopping centers, hotels, apartments, and so much more. So those are kind of like the physical properties that you see in the world. In fact, some of those areas that you see storage, like, you know, those big storage units, there's actually a REIT that specifically invests in that type of property. There are REITs that invest in luxury hotels, and so much more. So how do they make their money? Well, they derive most of their income in this REIT through rental income. So they charge rent on the property or the leasing of the properties. Think about, for example, a shopping center. They lease that out to a variety of businesses, and that's how they derive their income. So that's what's going on there. Let's talk about mortgage REITs really quick. Now, mortgage REITs, as you could probably assume, they're gonna make most of their money through mortgage interest rate. Not only mortgage interest rate, but also mortgage-backed securities. Now, if you're part of the Sweet Lifer family right here, you're subscribed to this channel, you will know it is my goal, my friend, to get out of mortgage debt. I want to pay off my home early, and I just thought about this for a second. What an interesting turn of events this will be. I'm going to pay off my mortgage, I'm going to stop paying all this crap interest to the bank, and guess what happens after that? I get the extreme opportunity to reverse course. Instead of paying the bank interest, I'm going to generate dividends from the interest collected by the mortgage REIT. I like that, and you should too. So let's work together to get out of debt so we can build wealth on the back end. Now, IRS actually are the ones, the government actually kind of controls these REITs and who qualifies to become a REIT and how they stay a REIT and everything REIT, right? Right. So 75% of the income in a REIT must be brought in by real estate or rent or interest, in the case of mortgage interest, or sales of the variety of real estate assets. If this investment corporation starts going rogue and investing in other things, they may disqualify from becoming a REIT. We don't want that. But let's talk about the most important part. It is what's in it for us. And here's where it gets exciting. REITs must, by law, by the IRS code, give us 90% of their taxable income. Must distribute 90% of their taxable income to shareholders annually. Ooh, that's exciting. Now, before I get into what I look for and what I'm investing in with my REITs right now, I want to talk about how you can get started today. And I want to share with you fund drives. But hold on, put the brakes on. This is not a sponsored video. I know typically, you hear this little plug and you're like, oh, here comes the sponsored part of the video. They're not sponsoring me at all. I do earn an affiliate income if you do click the link, if you want to get started with them, but they did not sponsor this video. I just like the product that they offer. Now, what they are is a specific real estate investment platform. It's an app. It's an easy way to get started, just like Robinhood, just like Webull, and some of these other brokerages we talk about. Here's the catch though with Fundrise. You do need a minimum of $1,000 in order to get started. So if you're a serious dividend investor, you're out of debt, and you have some money that you can put in, if you've got $1,000 or more ready to go into a REIT, consider using Fundrise. I'll include the link down below in the description. Now, if you don't have $1,000, but you have maybe $100 or $5 or something, You can still get started, but you can't get started with Fundrise until you build up $1,000. That's the minimum deposit requirement. Click the link down below to either Webull or Robinhood. I use both of them, and you can get started today, and they actually give you free stocks simply just for signing up as of the recording of this video. So make sure you check those out and get started today, because what I'm about to share with you, you can start giving yourself a raise today by starting your dividend portfolio. So let's talk about what I'm invested in. I'm super excited about one of them, but I'm going to share with you 4 opportunities today. But what I recommend, first of all, this is not financial advice. Go do your own research. You got to do what you're passionate about, what you understand, and what you're comfortable with. Don't just take my word for it. I also look at things that I am also really excited about. And let me start with just 4, but there's so many more that you can invest in. Go do some research and check out what interests you the most. Number 1 on my list is STAG. S-T-A-G is the ticker symbol. Now let's hear what's going on with STAG. STAG Industrial. What they do is they invest in warehouses across the country. This is cool for 2 different reasons. Number 1, they have a huge market value of $4.5 billion with a B. That is awesome. Number 2, they got a dividend yield of 4.6%. Number 3, they pay a monthly dividend. That means every single month that you continue to own shares of STAG, you will get around 12 cents per share as of the recording of this video. How awesome is that? But here's the biggest part of this. STAG, because they invest in warehouses, their biggest client at the moment is Amazon. And we all know how big Amazon's becoming. And the more that Amazon gets bigger, the more warehouses they need to get so they can get you your prime delivery in the next 3 hours from your purchase. STAG's gonna be there for them, giving them warehouse space. And I think STAG is a really cool opportunity to keep your eyes on because of that alone. Now they have a ton of other warehouses, but when you say the biggest client is Amazon, you kind of pique my interest with that kind of thing. I think that's awesome. Next up on deck, you might have heard me talk about this one before because I love it a lot. This is O, and O is the ticker symbol for Realty Income. Realty Income has $20.9 billion and a dividend yield of 4.9%. They also pay a monthly dividend just like STAG. Their monthly dividend is around 23 cents per share as of the recording of this video. And in fact, they just announced to me, I think it was today or yesterday, that they are planning that 23-cent distribution this month, and I'm gonna get paid that very soon. So I'm freaking excited for that. And if you own shares of O, I hope you're excited for it as well. But what they do is they focus on more of the leased retail properties. And give me a like down below or comment if you've heard of any of these properties. So I expect every single one of you to be dropping a comment. You ready? Walgreens, 7-Eleven, Dollar General, Dollar Tree are just some of the retail investments that O has. And the cool thing about that is they're kind of recession-proof in a matter. Because if you think about it, everybody's always a budget shopper going to the Dollar General, Dollar Tree, things like that. But also Walgreens is kind of a staple, as is 7-Eleven, a gas station. Everybody needs gas, and everybody needs the Slopies. So right here on yahoo.com, finance.yahoo.com, I got the O ticker symbol pulled up. Now, it's currently trading for around $64 a share. Here's where things get very interesting though. Every time you buy a full share of O, you're essentially giving yourself a 23-cent raise every month thereafter. So think about it this way. If I have an extra 64 bucks or 65 bucks laying around, and I decide instead of going out and buying beer or dumb shit or Starbucks or whatever the hell else you spend your money on, I instead put that $65 into a share of O. I give myself a 23-cent raise for that next month's dividend. Let's say I double that. Now I got 2. Now I got what, 46 cents? 46 cents raise. When's the last time your employer basically said, I'm gonna give you a 23-cent raise every single month? Well, you can do that for yourself by simply finding a way to find 65 bucks a month or whatever the share price is at the moment, because it will and potentially could go up. But who cares? You're gonna put that in every single month and continue to raise and raise and raise. And by the way, there's something I haven't talked about yet, and that is dividend growth rate. You start growing the dividend up, it's also going to add money on top of that 23 cents. The snowball is unbelievable here, guys. You got to get started today. But again, I always recommend get yourself out of debt first. Do not be sitting there with a 14.88% interest rate on a credit card or a loan or whatever the hell it is, because you're draining your money away to the debt collectors. Man, get yourself out of debt. It's worth it. All right, 2 more to go, and these are really cool. First, AGNC. I own this one in my Robinhood account. Founded in 2008, the cool thing about AGNC investments is that they make their money through residential mortgage-backed securities. So we talked a little bit about the equity and the equity REITs, which we covered in STAG and O, but this one here is the mortgage REIT. And so they have these mortgage-backed securities, and they make their money based on leverage interest rate. Another monthly, beautiful paying dividend. They pay every single month. And right now it's around 12 cents per share as of March 2021. So I know I've been teasing you guys with these monthly dividends. You got STAG, you got O, you got AGNC. Now, not all of them pay every month. Some pay annually, some pay quarterly. Let's talk about a quarterly one. For those of you that are interested in the cannabis industry, because I know a lot of you are. You maybe are investing in things like Tilray Corporation or whatever MJ ticker symbol is another ETF that you can get into. Whatever that is, that's cool. You're investing in the concept of cannabis. But did you know there's actually a REIT focused on cannabis? And that ticker symbol is IIPR. And that stands for Innovative Industrial Properties. Now, they have a market value of only $4.2 billion, a little bit less than some of these other guys, but their dividend yield is 3.03%. What they do is they acquire cannabis cultivation and processing facilities. So they lease these facilities to the growers under long-term triple net contracts. That's what's cool about it, because as the medical marijuana and some of these other things, especially recreational, start taking off, there's an opportunity here where not only this industry will continue to grow, but the properties that are leased will continue to grow. And they're going to continue to acquire more things. So IIPR is an example of that if you're interested in that type of thing. Now, they pay quarterly, and it's roughly around $1 per share per quarter. So it does range in motion depending on the time of the year, but that's what it is right now as of the recording of this video. So what are you passionate of? Are you passionate in hotels? Are you passionate in the storage facilities? Are you passionate in residential real estate? That's what's cool about REITs. You can kind of play on your passions a little bit when it comes down to thinking about your REIT dividend strategy. Now, one thing I got to put a note on, I'm a big fan of hotel groups. I love hotels and I love travel. Right now, I'm a little bit worried about the hotel REITs, but this is honestly probably a very good buying opportunity at the moment. You're not going to get a ton of dividends at the current because unfortunately the pandemic has slowed down the growth of hotels and hotel real estate development, but this could be the buying opportunity. It's on the low, stock up now, and as hotels and travel and tourism come back to life after the pandemic, that could be another opportunity to look into. So if you enjoyed the video, tap the like, check out these other dividend videos that might be interesting for you. And until next time, we will see you on the next video.